Welcome to Heart of Economy. Today we're not just talking about an ordinary security headline. We're talking about a development that could directly affect your portfolio. China is expanding its nuclear arsenal at a pace the world has rarely seen before. At first glance, it may look like a military maneuver, but in reality, it's a financial story, one that could shake markets worth trillions of dollars. From gold prices to tech stocks, from US Treasuries to defense contractors. In this video, I'll show you exactly how China's nuclear strategy is reshaping the global financial landscape, what risk it creates, and what opportunities it may bring for investors. Because this isn't just about how many missiles Beijing has. This is about how those moves can guide your investment decisions. If you're ready to understand that, you're in the right place. Let's begin. China today holds roughly 600 nuclear warheads. According to Pentagon estimates, that number could rise by 1,000 by 2030. This is not simply a numerical increase, it signals a fundamental shift in China's military strategy. Think back to the Cold War, when the United States and the Soviet Union were locked in a balance of mutually assured destruction. Today, China is moving closer to that balance, and that directly challenges America's global dominance. Now, let's consider the financial angle. US defense spending already exceeds $800 billion a year. China's nuclear push could trigger new budget expansions in Washington. More defense spending means more borrowing, more debt issuance, and that directly affects long-term interest rates and treasury markets. And it won't stop in the US. Europe is being drawn into this race as well. Germany, France, and the UK have already begun raising defense budgets. Globally, governments will need to borrow more. That means the bond markets are entering a new era. Now let's talk about risk premiums. There is a well-known rule in finance. When uncertainty rises, gold shines. Gold has been humanity's safe haven for thousands of years, and China's nuclear expansion is dramatically increasing global uncertainty. Investor Ray Dalio has said it many times. Geopolitical shocks can be more lasting than economic shocks because they erode trust. China's nuclear buildup is exactly that kind of shock. Gold reached record highs during the pandemic in 2020. It climbed again in 2022 as Russia invaded Ukraine. Today, with China rising tensions around Taiwan, gold could be on track for yet another all-time high. My personal view? If tensions over Taiwan continue to rise through 2027, we could see gold prices pushing well above $2,500 an ounce. Gold isn't just a safe haven, it may be one of the strongest return opportunities in this environment. Now let's focus on Taiwan, the true center of this story. Taiwan is the heart of global semiconductor production. TSMC alone produces more than 50% of the world's advanced chips. These chips power everything from Apple's iPhones to Nvidia's AI processors. So what does it mean if China pushes to take Taiwan? In simple terms, a technology shock. Think of the oil crisis of the 1970s when global energy supplies were cut off and economies were thrown into chaos. This time, it wouldn't be oil, it would be chips. Economist Paul Krugman called it a new kind of supply shock. If Taiwan's chip production is disrupted, the Nasdaq could fall 20, maybe even 30%. Not just tech stocks, the entire digital ecosystem could collapse under the pressure. My view, this is a serious warning for investors. Reducing exposure to tech-heavy portfolios, or at least hedging against this risk, might be one of the smartest defensive moves right now. But remember, geopolitical risks don't just bring danger, they also create opportunities. And in times like these, the defense sector is always front and center. In the US, companies like Lockheed Martin, Raytheon, and Northrop Grumman surge whenever global tensions rise. These firms thrive not only on government contracts, but also an investor interest in time of uncertainty. Warren Buffett once noted that long-term trends are what matter most, and defense spending is as close to a guaranteed trend as it gets during global crisis. China, of course, has its own defense giants, heavily backed by the state, and beyond weapons, there is another critical dimension: energy. China's nuclear buildup isn't just military, it's also civilian. Beijing is targeting 200 gigawatts of nuclear energy capacity in the coming years. That means soaring demand for uranium. Companies like Cameco and BWX Technologies could see significant upside from this global energy pivot. My forecast: over the next 5 years, defense and nuclear energy stocks will become increasingly important components of well-diversified portfolios. So let's bring it all together with possible market scenarios. Scenario 1. Low risk. China expands its nuclear arsenal but avoids confrontation over Taiwan. Markets stay stable after short-term jitters. Investors see a little long-term disruption. Scenario 2. Moderate risk. China steps up pressure on Taiwan, military drills, political brinkmanship, but no outright conflict. Markets remain under stress, gold climbs, treasuries gain value, defense stocks rally, while tech sees volatility. In my view, this is the most realistic scenario today. Scenario 3. High risk. China intervenes in Taiwan or faces a direct clash with the US. In that case, tech stocks could collapse, global equities could face a panic sell-off, while gold, the dollar, and defense contractors soar to record levels. This could hit harder than the 2008 financial crisis. For investors, the takeaway is clear: diversify. Hold some gold, some treasuries, and some exposure to defense and energy. That's how you manage the risks while still positioning for potential gains. Today, we examined China's nuclear buildup not just as a military issue, but as a factor shaping the very future of the global financial system. We saw how this development strengthens gold, boosts defense and energy plays, but leaves tech dangerously exposed. Remember, markets always fear uncertainty, but for investors who understand it, uncertainty can be transformed into opportunity. If this analysis gave you a new perspective, don't forget to subscribe to Heart of Economy. Here, we don't just talk about headlines, we connect them directly to your portfolio. See you in the next video, and always stay one step ahead in your investments.